What's up YouTube? Welcome to Wise Wealth, where we dive into all things personal finance. Today we're bringing you another one of our top 5 dividend stock videos, but with a twist. Usually we focus on UK stocks. We've done videos on these for the FTSE 100 and the FTSE 250 previously, links are in the description below, but we need to branch out to cover some of the United States. So today we're bringing you 5 of the top dividend stocks from the S&P 500. These are the top 500 listed firms by market capitalization on the US stock market. In a time where dividend cuts and suspensions are rife in the market, the S&P 500 has proven to contest that trend. In the months from March to May of this year, 361 of the firms paid out dividends, and 98 of them resulted in dividend increases from the previous period, with only 35 dividend decreases. Having investments in both the UK and the US is a great way to diversify your portfolio, maintain a high level of returns while minimizing your risk. We should all strive for a balanced portfolio. Passive income is great, but we can take it to another level when we can add a level of security to it. We all love a steady stream of income, especially one which requires no effort in return. So why not try to maximize that? If you like this type of content, be sure to hit the like button to let me know, subscribe to my channel for more videos like this, and make sure to enable the notifications by clicking on the bell icon. I'll leave a link to a top 5 playlist in the video description below if you want to watch more of these, and without further ado, let's get into today's video. First on our list is Invesco. Invesco is an independent investment management company with over a monumental $1 trillion in assets under management, headquartered in Atlanta, Georgia. The firm has branch offices in 20 countries and operates under many brand names and is our first constituent of the S&P 500. As of this video, they are currently trading at $7.98 per share. Invesco's share price peaked at over $40 back in 2015 and has been on the decline since. As a result, this has given rise to a growing dividend yield. The recent crash really hit the share price hard, and the stock now has a recorded dividend yield of 12.6%. There is optimism in the market for this stock, as analysts have forecasted earnings growth year on year from 2020 onwards, leading to the suggestion that the share value is set to be on its way back up. Another impressive feature of this stock is that the firm has a 10-year record of consecutively rising dividend payouts. Secondly, we have Schlumberger. Schlumberger is listed on the S&P 500 as SLB. The company is an international oil field services company, including petroleum drilling, production and processing, and employs approximately 100,000 employees across more than 120 countries. As a member of the oil industry, Schlumberger has been hit hard by both the pandemic and the extreme volatility in oil prices. The 52-week low of $11.87 has seen somewhat of a recovery, as they are now trading at $18.05 per share. This gives the firm a current dividend yield of 11.08%. With oil prices looking set to increase steadily after rallying over the last week, this could change in the short term if the share value follows suit. To add to this, should the OPEC Plus organization agree to a cut in oil supply, this could drive the price per barrel up and once again have a positive impact on the share value of the firm. In any case, a dividend yield of over 11% or slightly lower in the short term is still a highly attractive prospect from such an established firm in the oil industry. Number 3 on our list is IBM. IBM is probably one of the most widely known tech firms headquartered in Armonk, New York. The firm operates multiple segments, including systems hardware, software solutions, and global technical services. IBM is one of the largest employers in the world, employing over 350,000 individuals. As of this video, they are currently trading at $121.70 per share. IBM currently pays a quarterly dividend and has a recorded yield of approximately 4.6%. This is unique in the sense that most tech giants don't pay attractive dividends, and some don't at all, most notably Amazon and Alphabet. While the yield is much lower than the previous examples, there are a few reasons why I have included it on this list. Firstly, due to the fact that IBM's share value wasn't hit as hard by the pandemic, so we haven't seen a stark rise in yields like we have seen across the board. The recurring revenue model of IBM Software Solutions has guaranteed a steady stream of income throughout this crisis. Secondly, IBM has a track record of consistently outputting dividend payments to shareholders since 1916. As a dividend investor, we want our returns maximised, but also guaranteed as much as possible. To be able to solely live off these investments as a consistent stream of income is what we need to look for. Number 4 on our list of top dividend stocks is Coca-Cola. As of this video, they are currently trading at $46.11. You'll probably notice that I didn't go on to describe what Coca-Cola does, as pretty much everyone knows Coca-Cola as the de facto go-to brand for cola soft drinks. They have pioneered this space for many, many years and will continue to do so long into the future. Warren Buffett puts it succinctly by saying, "It doesn't take a genius to know that people have loved Coca-Cola products for years and years and will continue to love them in the future." By saying this, he's highlighting the fact that Coca-Cola is a relatively safe investment. The share value has consistently grown over the years, meaning any investment is surely bound to reap rewards in the long run. A prime example of this is looking at their share value through the pandemic. As a consumer product, they have been somewhat sheltered from the economic turmoil. Consumers have continued to buy their products, and while they did see a drop in sales due to hospitality closures from the lockdown, their revenues remain strong. They have a current dividend yield of 3.56%. Once again, it's not the highest, but it was included on this list because of the guaranteed revenue stream it provides. A spokesperson for Coca-Cola recently said that, with regard to the dividend, we currently have no intentions to change our approach. This should give investors confidence that they will continue to receive their dividend payments as planned. The quarterly payment of the dividend is also a consistent and frequent revenue stream to build up additional passive income. Number 5 on our top dividend stocks is Kymco Realty. Kymco is a commercial real estate operator, one of the largest in the US in fact. They focus their efforts on shopping centers, owning interest in over 400 across the US. As of this video, they are currently trading at $10.90. Kymco currently commands a dividend yield of 10.27%. There is, however, a risk associated with this dividend that we may not have seen with the previous examples. As a landlord for retail tenants, the industry has been rife with reduced payments being made to owners, with some tenants refusing to pay their rent as they cannot operate their business during the lockdown. Some tenants simply do not have the funds to do so. This has caused many landlords, particularly retail owners, to build up substantial accounts receivables, with the potential for those to turn into bad debts. If this becomes a significant issue for the firm, then we may see the suspension or cutting of the dividend to preserve the financial stability. We've already seen it in the UK with FTSE 100 firms such as British Land and Landsec opting to not pay their dividends. Another factor to consider is the ever-changing landscape of the retail sector. How we consume and make buying decisions will have effects on the viability of shopping malls and subsequently their owners in the long term. So I would put this on the riskier side of investments in the current conditions. So there you have it. 5 top dividend stock investments to look at on the S&P 500 in 2020. The current market provides us with a great opportunity to invest in these large companies at a fraction of the price that they were listed at only a few months ago. The dividend yields, in some cases, are significantly higher than usual as a result, and if the firms continue to pay at historic dividends, then we will see a significant return on our investment. Let me know in the comments below if you have investments in any of these companies, or if you think there are any other noteworthy mentions to include on a list like this. Thanks for tuning in today. I hope you enjoyed the content and got some value out of it. Remember to subscribe to my channel for more content and hit the like button. And until next time, see ya.